August 7th, and welcome. Hope you guys are doing well out there. This market has absolutely been pretty crazy. We got you on Facebook and YouTube and X, along with those of you in the Moxie room. I was just, how long were we together? A little over an hour, maybe an hour and 10 or 15 minutes. So nice long morning. We were looking for the market to make a move, and it is just sitting up here at resistance. So we'll see what we can do, but we've had a couple opportunities over the last few weeks, which have been nice. And even that pullback yesterday, I was telling the Moxie traders, this is what's getting me excited about the 0 day, basically the day trading options, is I said we should expect the market to pull back to the 15-minute 50 at some point. I didn't exactly think it was going to be yesterday, but it did happen. And this move, it doesn't look like much, but and I know I'm using the SPY, but if you look at the SPX, so the 5280 puts from here to here moved 1600%. That's pretty crazy. And if you didn't catch that, if you caught the more official entry from here to here, it was 350% in less than an hour. Pretty wild. This is stuff that like, man, I just got to look at this stuff. It's pretty darn exciting. And so this is what I'm going to be getting into more. We're going to be talking about it more. I do have a webinar coming up tomorrow. Actually, today. Is today Wednesday? It is Wednesday, isn't it? So that webinar is today. It's the second one. So if you guys didn't get the first one, you can check out the second one. We do have some updates. I've been updating my stats. I think I'm up to $60,000 in 47 days and 47 trades. And that's me starting from like not doing this before. So I almost want to, now that I've got some more proficiency underneath my belt, I almost want to start that over and see what I can do in another 47 trades now that I actually know what I'm doing. This is pretty fun. And so, yeah, yesterday we managed to catch a quick little trade in through here. I mean, get everything. So yesterday was also looking bullish. We caught a trade right there. We exited here and exited here. We got 82% on that one. And then we got 17% on that one. Nothing that's going to knock your socks off, but hey, pretty nice day. I know a lot of the traders out there that they got 100% right up there. So they're like, hey, I got a double. I'm cool with it. I'm just going to walk away and be happy with it. And that was a great trade. But I'll tell you the real winner. I mean, the thing that I keep looking at this, and this is like every day is an opportunity. There was a trade on the way up and there was a trade on the way down yesterday. And this is like so much fun because there's so many opportunities out there. So yeah, just come check it out. I got some more examples. If you guys want to see what I'm talking about and that the stock guy got into day trading options, I'll show you what's happening and my stats and everything like that and whatnot. So generally speaking, with a big drop down like what we got on Monday, that's pretty much the flush out, right? We should all pretty much look at that and say, yes, most likely the market is going to bounce and drift up from there. The real question is this the low or is this just a low? And that is the $64,000 question, right? For now, I think most of us are pretty content with saying that we think this is a low, but not the low. And so we've had the market drifting up a little bit. I do think we're going to go higher, but it seems like it probably needs to do a little bit more sideways before the next move up. I just don't think that the market's going to roll over to the downside here yet. And I think that there's more up. I think that there's some short squeezing that's probably going to happen. But I think everybody kind of just needs to get their heads back on straight from the really big moves down here. And then everybody is trying to kind of reposition based on the carry trade. I think everybody's heard about that Japan has raised rates 25 basis points. And so that's a lot. When you are not dealing with high interest rates at all, 25 basis points mathematically is a lot. And so that made everybody's mathematical equations and their profits and how much money they were making, all this stuff. It really changed a lot of that. So everyone's trying to get repositioned and figure out what's going on here. But yeah, you could just clearly see that we went way too far. We did snap back. And, at this point, we're at a point where it is running into some resistance. And now we need to figure out how long it's going to go sideways before I assume before it moves up a little bit further. But like we saw last week, there could be a down move before the up move. Gotta love the market, right? You gotta look at this, and either we maybe take another dip and then go up, or we actually just go up. So that's basically the idea and the direction that I'm looking for. I do want to see these things. I do want to see the market move up because I just don't think it's ready to keep going down at this point. Like we already kind of had that shock and awe from Monday, probably wiped out a lot of stuff, got a lot of liquidity, wiped out a lot of stops, capitulation. And of course, we're going to be bouncing after that. So we are starting to become over the moving averages, like right here. And like I was showing the Moxie crowd this morning, all the lights are flashing, but nothing's moving. So we're bullish here, we're bullish here, we're bullish here, and yet the index itself is sideways. Now, maybe there will be something later today, but the options I was looking at today, we took 2 tries at them. Nothing could happen. The market's just totally sideways today, and that's just going to be how it goes sometimes. All right. So other than that, let me know if you guys have any particular questions. I know we got a bunch of people over here, it looks like, on Facebook and especially YouTube. But those of you in the Moxie room this morning, I know we were talking pretty much just about the index and day trading and all that. What are we looking at as far as swing trading? Because I keep looking around and I just don't have that much to really be super excited about. FNGU is the FANG stock ETF, the leverage ETF for all the FANG stocks. And so basically, I think it's going to move kind of like the market. I would expect that this has been a massive move to the downside, and it culminated with the capitulation move, that flush out move, the giant gap down that we had on Monday. And I would imagine that people with dry powder are going to be looking at this and coming in and doing some dip buys. But even if they do that, I think that this is a bounce in a downtrend. And at best, even if it's not a bounce in a downtrend, I think that we do move up, but we're probably going to have to keep doing some chopping around and sideways moves and something like that before we can really ever say that we're ready to go higher. We don't know yet if we are going to resume an uptrend. And if you guys just want to see an example of that, look back here. I think it was July to October, to the end of October. And you can see down move. Yeah, we had a bounce, but we got another down move. Then we got a bounce, and we got another down move. We could be in for kind of a prolonged move to the downside or a prolonged consolidation period. Something like this, when the mega caps get hit this much, it doesn't go unnoticed. And I think that a lot of the big financial institutions have to kind of keep, figuring out what do they want to do with this. A lot of numbers and a lot of their math has now changed because of that carry trade, and also the idea that our interest rates are going to start getting cut. Jerome Powell was pretty much very dovish, and he all but said, yes, we're going to cut rates in September. And now it's crazy. Gosh, you keep hearing the news that come up, like, all the Fed heads and everybody related, like, oh, we should cut, or, we need to keep hanging on this, or, we're at peak, whatever. And you just hear all this stuff. And now that we get this giant move down, I keep hearing all this news coming out like, oh my gosh, we need to do a emergency 25 basis point rate cut like next week, or at the September meeting, we need to cut by 75 basis points. It's like, you guys were just saying a little while ago, like, no, we need to be harder and up for longer and all this kind of stuff. And it's just politics. Gotta love it. And so we don't know what's going to happen next. Are they going to do an emergency rate cut? No, probably not. I don't think that would look good for them. And so I think they are going to stick to September as far as when they're going to do their rate cut. And then really the question is, are they going to do 25 basis points or are they going to do 50? All right. VJ, you were looking at 1998 July, and it looks very similar to what's happening now. To what I think, okay, that's fun. Let's go back in time. So SPX, I assume you're looking at the SPX versus the NDX. They're probably going to look awfully similar to each other, but let me know if you had anything specific about that. Daily, let's do max. Yeah, SPX 1998. Let me see. Let's give the computer a minute to load. 1998. Oh yeah, I gotta keep going back. All right, where is this, man? I gotta really dig deep on this one. And 2006. Oh, there we go. It was even marking it. And then B1. So having the VIX as high as it was over the last week, yeah, that really kind of changed the equation on stuff when it came to the 0 day. I really actually didn't trade. Well, two things. First of all, I didn't trade last week other than Thursday because they gapped the market down and then they had it flagged it sideways. And same thing on Monday. They gap it down and then they flagged sideways. So there really wasn't any day trading opportunities. It wasn't until Tuesday that we finally got a little bit of a drift up in the market. And we were able to make percentage on that. But by that point, the VIX had come down. So it kind of answered its own question that with the VIX so high, the options cost more. Yes, it did make it more difficult to catch a directional move, but they didn't give us a directional move because the indices just got gapped down and flagged. So yeah. All right, let's see. 1998. Just in general, 1998. Let's kind of see what this looks like. Oh yeah, you're kind of looking right. Yep. I get it, VJ. Yeah, that's kind of looking interesting. Yeah, July. Yeah, actually that is looking awfully similar, isn't it? Yeah. Yeah, actually that's a great find. That does look very, very similar. Yeah, so let's see where August is. So there's the beginning of August. Yeah, actually, nice find, VJ. So look at that huge gap down, and you can see. Let's really dive into this because this is looking pretty interesting. Yeah, nice find. So beginning of August, talk about seasonality, right? There's my mom's birthday right there, and huge move down. And look at this. You have 1, 2, 3 days of an up move, and all it did is bring it back to the 8 EMA, and then they had more downside, which, yeah, we could be into that. And then finally, you can see here, once it basically hammered a low, it did have another up move right into the 21 EMA. But again, another bear flag and lots of movement in through here. I'm sure that was pretty exciting for day trading back then. So lots of movement in there. It could not get past the 21. Notice that the 8 was still below the 21. The Moxie indicator is still red as can be. And look what it did. Another boom, boom, boom. A couple more days to the downside. So yeah, I think we got to be careful out there. And then finally, once again, you can see here, it got oversold, had a bounce, a pullback, another bounce, another pullback, and another bounce as it worked its way higher. So yeah, we could be all over the place. Where if if I'm saying I think that eventually we get back to the daily, gosh, let's do this. Let's have fun with this. Let's bring this over to the daily chart and let's look at it currently. So we got current daily on the right and 1998 daily on the left. And you can see, yeah, here you go. There's the third ATR. There's that third ATR. It broke off of the daily 50 and it broke off the daily 50. Yeah, looking very similar so far. And back in 1998, it could only muster a move back to the 8. And there we are again. We're back to the 8 EMA. Yeah. So what are we in for? Well, I was wondering if on this particular move, could we get up to somewhere around the daily 21? If we can keep going higher, that would be my target. But if you look at 1998, that daily 21 target didn't happen for another 5 or 6 days. Yeah, yeah, it rhymes. Yeah, history doesn't repeat itself, but it rhymes, doesn't it? Very interesting. Yeah, let me take a screenshot of that. That's noteworthy. Yeah, pretty cool. And let's see. So from top to bottom, you said it was 15% roughly. Yeah, let's see. Yeah, 20%. That was a 20% pullback right there. And where are we at right now? Roughly, let me get this down here. We're not even at 10%. So coming up on, nine, call it 10% on the current pullback, that's pretty reasonable. I think that's definitely why the market started to bounce, but that doesn't mean the low has to be in. Yeah, great. Good information. Yeah, I'm going to be talking about that. So guys, remember, I've added some new material. Okay, so this is the webinar that I have tonight is the same one that I had on Wednesday, but I want to make sure we have some updated information because some new things presented itself from last week to this week. I mean, this is why we love the market, is because there's always something going on. There's new news coming out and new activities. So I did update some stuff. I want to show you kind of like how much further of this do we have to go. I've kind of already talked about this to the Moxie group, but I've got a couple things. And if you're wondering like, wow, how do we know when to go swing long again? I've got some indicators for you that I'm looking at, but we certainly do need to be careful. And this is why I haven't done anything swing trading yet. Like, I don't know. It just doesn't feel like it's quite ready to go yet. And even at that, we can have still a big major move. And look at this. Even this was a bear flag. But look at how many days it took for this thing to get back up to its daily 50. And even at that, it was resistance. The real key, and I'm just looking at this now, look here. Here is your overall double bottom. And then look there. Now you're starting to get that divergence on the daily Moxie indicator. So, Emil, I know we kind of talked about this before too. You were saying that you were looking for some sort of double bottom, and I said, sure, but what's your time frame? Because if you even look at 1998, there was a double bottom. It took a few days, and we did get a move up, but then you could say there was a double bottom, and then overall, you could say here was the more major double bottom that actually helped get things going again. So that's why, you got to say, what's your time frame, time horizon when it comes into this? Yeah. And guys, this could be the other thing. You got to think about the election. I do wonder, now that everything has changed, like Trump dodged a bullet, literally. Joe Biden's out. Kamala's in. She just picked her VP. He picked his VP. And it seems, and again, this isn't being political, but it seems as though there is now more energy, more competition with this election. And so you got to think about either follow the money, or nobody knows where the money is going to go yet. And so the major players, the big players, all the hedge funds and the firms that control the money and where these things go, they don't know who's going to win. Right? Maybe the betting odds, from what I understand, is uncertain. Yeah, I mean, so a lot of uncertainty. No, actually, Thomas, I would say there's more uncertainty right now. And I think it's because you don't have Joe Biden falling asleep at the wheel. You at least have a functional human, Kamala Harris, that is a real person at this point. And so there could be some energy there, and the markets are like, well, we don't know who's going to win. And so what they could be doing is that they are going to start pulling back their money and starting to reallocate it somewhere else. And then they just don't know where to place their bets. So this is something we could be seeing. And then actually, here's something. If you guys remember in 2020, when did the market really take off? When did the small caps, and it was to the day, when did the small caps take off? When Joe Biden got elected. What, November 7th? Yeah, so November 7th is when it took off. And check this out. Let's see it again, November. Well, it was over the weekend. It seems though back in 1998, the bottom was in. And maybe by that point, it was a, I don't know, better idea of who was winning. I don't know. I forget what presidential cycle we were on, if there was some sort of election. Maybe this was midterms. I don't know. But that is something to look at and see where we are as far as the election cycle and what the market is doing. So yeah, there's a lot of uncertainty out there. People who run money, who kind of figure out where everything is going to go, if they don't know where the administration is going to go, they could be pulling back and putting their money elsewhere and waiting for the more chips to fall. Okay. Loco no Joko. I'm going to no comment on all of that. Funny, but no comment. All right, so Emil, 1998 was Clinton beating the midterms due to his female controversies, shall we say? Yeah. Okay. So anyway, yeah, that's very interesting. We're in a prolonged pullback. As I said, I think we've got more to go, but great time for me to be switching over to day trading, because I'm not really ready to step in on a swing trading basis quite yet, guys. A lot of things got hammered, and we'll just kind of leave it at that. Okay, so let's wrap it up. tonight, got that webinar. I'm sure it is plastered everywhere. Just log into Simpler Trading, come to our YouTube page. It'll be broadcasted, it'll be recorded. Whatever you guys want, come sign up for it. And then for those of you who are interested and like think that this is interesting, like the 10th, this Saturday, the 10th, what is that, 3 days from now, we're going to be actually doing the class. And I was even telling the Moxie traders this morning, I was like, me putting together the class is solidifying all the things that I've been learning and teaching and instructing and trading myself. Because now it's like becoming even clearer how these 0-day options are working and what to look for. And that even that case study yesterday with that 15-minute or 30-minute put that at the end of the day that went 350% or 1600%, I was like, that's incredible. I got to keep studying this because these opportunities are all over the place. And if you had if you had $1,000 and you got 1,600%, that's $16,000. And it's not just like, oh, pie in the sky, you'll never catch it. It's once in a while. No, this happened yesterday. And it happened, as I said, that price should pull back to the 15-minute 50. I was like, it was right there. So I'm super encouraged because these things happen all the time. We just have to be like in the right spot, ready for it. And all we have to do is trade the SPX. It's great. It's great. I'm super thrilled about it. Okay. All right, guys. Yeah, Logo no Joko. You make me laugh, man. So that's great. But we'll see you next week, guys. Okay, come to the webinar, come to the class. I'm just thrilled. All right, see you guys later. Take care.